Imagine you're just doing normal life stuff, selling old clothes, running a side hustle, maybe flipping furniture, or accepting payments through PayPal/Venmo/Cash App. One small number change suddenly lands millions of Americans under IRS scrutiny. That number used to be $20,000 and 200 transactions, then it dropped to $600, and now it's changed again. What if that change saves you thousands of dollars in tax prep, anxiety, and audit risk? In today's video, I'll walk you through exactly what the IRS rule is now, why it changed, what you actually need to worry about, and how you can use this to protect yourself, grow your side hustle with confidence, and avoid getting blindsided. Stay with me, because I guarantee by the end you'll feel more empowered and maybe even relieved. Are you ready to escape IRS surprises like their plot twists in a thriller? Brief history: under the American Rescue Plan Act, ARPA, of 2021, the threshold for platforms, third-party settlement organizations like PayPal, Venmo, Cash App, Etsy, was lowered from $20,000/200 transactions to $600 for reporting via Form 1099-K. What that meant: even a modest amount of side hustle/occasional selling triggered automatic reporting, documentation burdens, potential confusion, audits, and fear among casual sellers. If you sold baby clothes, old electronics, or accepted payments for babysitting, you might have feared getting flagged just because you didn't have old receipts. That little $600 threshold threatened to turn every simple side gig into a tax headache. Stakes: an estimated millions of Americans could have been unexpectedly pulled into additional paperwork and audit risk. But then something changed, and that change may have saved you from a lot of stress. Introduced the law, the One Big Beautiful Bill Act, OBBBA, passed July 4, 2025, contains a provision that restores the former $1,099K threshold. What it does, it reinstates the $20,000 total payment and 200 transactions threshold for third-party settlement organizations. It is retroactive to tax years after December 31, 2021, per IRS fact sheet. So the $600 rule is essentially reversed for $1,099K reporting, TPSOs, under that law. Suddenly, the rule that felt like IRS surveillance got rolled back. It's not perfect, there's nuance, but for many Americans it's a win. But wait, before you relax entirely, there's more complexity. Because just because the law changed doesn't mean every scenario is crystal clear. Let me show you what you still need to watch out for. Explain that before the law's final guidance, the IRS had proposed or delayed phased-in thresholds, $5,000 threshold in 2024, and $2,500 in 2025 under earlier IRS guidance. Clarify whether those transition thresholds are fully overridden, or whether there is any lag in guidance/enforcement. Emphasize, even though OBBBA reinstates $20K/200 trans, you must check the IRS FAQs, Fact Sheet 2025-2008, to see how that applies to your 2024 or 2025 filing. Don't assume you're safe for every tax year until you confirm. One misinterpretation could lead to missing required forms or penalties. So, if that's the legal background, how does it actually affect you, depending on your situation? Casual sellers/one-off sellers, garage sales, selling old furniture, low-volume online selling, most will likely be safe now from the automatic $1,099K forms, unless they hit $20,000 and 200 transactions in a single year. Side hustlers/gig workers/small-scale sellers, e.g. Etsy/eBay sellers, freelancers collecting payment via PayPal/Venmo/Cash App, they need to check volume. If you cross both the dollar threshold and transaction count, you will still trigger a $1,099K. Important nuance: even if you don't receive a $1,099K, all income is taxable. You're still required to report income on your tax return. Also, platforms can sometimes issue you a $1,099K even if you don't meet the threshold, voluntarily, or due to internal policy. This feels like relief, but not a free pass. You still must track your income. You still must stay organized, or risk an audit headache. Think of it like the IRS turned down the volume knob, but they're still listening. Don't yell your transactions in public, but don't whisper them either. Alright, that covers who. Now let's talk how you should prepare, record keep, and protect yourself. Keep good records, each sale/transaction, invoice, cost basis, receipts for expenses. Even when you don't get a $1,099K. Categorize transactions, separate business versus personal, gifts/reimbursements versus sales for goods/services. Ensure your payment method settings, PayPal/Venmo/Cash App, identify whether you're using business/personal profiles correctly. Monitor the number of transactions and total volumes per platform across the year. Consider setting a running tally. Consider talking with a tax professional if your side hustle is growing or you're approaching those thresholds. Every dollar you track today saves you headaches, stress, and potential fees tomorrow. Because while registration and record keeping is one thing, there's still another layer you might not see coming, especially as you scale. Stay tuned. IRS enforcement hasn't gone away. Even without a $1,099K, the IRS can audit your return, request documentation, ask for proof of expenses versus revenue. Mistakes still happen, wrong forms, misclassification of personal versus business, missing records, which can lead to penalties, interest, or audit delays. Growth risk: if your side hustle scales, you hire people, sell more items, or run many small value transactions, you might cross thresholds accidentally unless you plan ahead. Opportunity risk: on the flip side, by understanding these rules, keeping clean records, and planning ahead, you position yourself to grow with confidence, avoid surprises, and scale your income wisely. You have the chance to turn your small hustle into growth while staying compliant. That's how wealthy, smart people play the game. So what does smart, future-oriented planning look like? Adopt a mindset of entrepreneur plus owner, even if you're just doing side gigs. Treat your payments and income like business cash flow. Use simple tools, spreadsheets, bookkeeping apps, or small business accounting software to track your volume, categorize expenses, and forecast growth. Plan ahead. Project what your income might look like next year. If you expect volume to rise, set internal alerts before you hit 200 plus transactions or $20,000. Think tax efficiency, deduct eligible expenses, track cost basis, understand when small purchases become business expenses, and set aside for tax liability. Maintain a buffer. Even though threshold is higher now, taxes and audit risk don't vanish. Consider regular quarterly check-ins with a tax advisor. Are you planning to grow your side hustle next year? If yes, how will you track it so you don't get surprised by tax season? You're not just avoiding risk, you're positioning for opportunity. Here's what I want you to remember. The $600 rule for $1,099K is gone, replaced once again by $20,000 and 200 transaction threshold, thanks to OBBBA. That change restores safety for many casual sellers. But it doesn't absolve your responsibility to track income, categorize expenses, and stay ahead of your growth. If you're building a side hustle, turning your passion into revenue, or simply want to live your life with financial control rather than tax surprises, now is the time to act. Set up your tools, audit your records, plan ahead. If you found this video helpful, smash that like button, share it with someone who runs a side hustle, and subscribe so you don't miss future updates when the IRS issues new guidance. Also, drop a comment below. Is your side hustle growing? How many transactions did you have last year? I'll read your responses and may make a follow-up video. Thanks for watching. Stay smart, stay proactive, and build your prosperity on your own terms. I'll see you in the next video.